Singapore, the perfect place to mix business and leisure.
%22 income tax for the top 5% owners from 20% recently. That's still among the lowest in the developed world, but higher than rivals like Hong Kong, which has 17% flat rate. What makes you think that the top talent will not leave the country?
Well, it's a good question, and I think first some of the answers are in the question you posed itself. I think we do have still one of the most competitive personal income tax rates in the world. So it's not just in comparison to the region, but also when you look at OECD and so on, because the competition for talent is global, really. So it's not just about centers in Asia and so on. The second thing I would say is we don't compete on the basis of just personal income tax. I mean, if that were the only criteria, then it's a very one-dimensional assessment, and I don't think that's the basis on which many make the decision. It's a multiplicity of factors. So on the one hand, it's businesses making a decision on where they want to locate their business. So tax rates, and it's not just personal income tax rates, but also corporate tax rates, and our headline tax rate is 17%. That's also very competitive. And if you look at other indirect taxes and so on as well, we're quite competitive. So that's one particular angle. The other angle is, of course, the other attributes of the economy and the living environment in Singapore. So I think...
But it is a high cost. There is high cost of living in Singapore, high cost of accommodation. So given the high cost that they're already experiencing, plus now a higher income tax rate, why is it attractive?
Well, I would say that, firstly, cost, yes, but we don't compete on the basis of low cost. We compete on the basis of value. And that is why if you look at the kind of industries we've been promoting in terms of the value add, we focused on the higher value add industry. So in manufacturing, whether it's pharmaceuticals, biomedical sciences, electronics, but at the higher end and so on. And then our connectivity and the various other elements, because Singapore still remains one of the best places in the world, and certainly in Asia, to live and work, and certainly if you have a family and so on. So this is, I think, another big factor for many talent, as you would call them. So I think there's a multiplicity of factors involved. So it's our assessment that this shift, whilst yes, it would look in isolation, it looks significant, but I think when you look at the totality of factors, we're quite confident that we can maintain our relative competitiveness. And the other attributes, our location in Asia and our other economic assets, I think combine to make Singapore continue to be a very attractive destination.
Singapore is tapping all avenues to boost revenue. We have the top 5% owners. You're also tapping state-owned wealth funds like GIC, Temasek, now MAS as well. What makes you think that you can tap all these resources without overstretching the resources of the country?
Well, first, I think, there are different sources of revenue. So tax revenue is one. And I think the personal income tax adjustment here is one example of how we are trying to broaden the tax base and also have an element of redistribution and equity. So keep the burden on the middle income group low and try and do redistribution transfers towards the lower income group. That's in essence what you see in this budget, for example. But I think beyond the tax rate, if you look at some of the other sources, so we've been using what we call net investment returns. In other words, we look at the long-term expected rate of return from our various funds that are held by Temasek, by GIC and MAS. So hitherto, we've been tapping half of that expected return from the GIC and from MAS. That's been the elements we've been tapping. We have not been tapping Temasek until now for a variety of reasons which the Finance Minister explained. So now Temasek is brought in as well. But I think we're not stretching it because we're still utilizing half. So in other words, there's still headroom for further tapping. I think the key point I want to make, though, is if you look at the expenditure and the projections that the Finance Minister has made, a lot of the expenditure for government is driven by development expenditure. Investment in the Changi Airport, that's a $3 billion allocation to a fund to develop Terminal 5 in Changi Airport. That is a 10, 15-year type of undertaking. Similarly, investment in public transport. So these are assets which will be productive and they will enhance our economic base. And secondly, you can also tap other sources of funding for that. If
Such as?
Well, possibly you can tap capital markets, you can tap bond markets, and so on as well. And these have been done.
How about corporate tax? Traditionally, corporate tax is the biggest contributor to revenue, 4 times more than personal income tax. Do you see the government raising corporate taxes?
Well, if you see what our finance minister has given as an undertaking, based on the adjustments we've made in this budget, we don't see a need to make any further adjustments till the end of the decade. So I think that's a fairly clear signal about where we are heading. Now, then we have to assess what are the options. So as I said, it's not just about tax rates, it's also about other sources of funding. Because if it's a productive development asset, there are other ways of funding them as well. And these are some things that the Finance Ministry will have to explore.
One of the biggest gripes in Singapore is the increasing wealth gap. Do you think this budget, which has practically given everybody something, some goodies, do you think it sufficiently addresses the wealth gap?
I think this is a global challenge. It's not peculiar to Singapore. The fact of the matter is incomes are stretching. So at the high end, you're seeing incomes, the returns to top talent are getting higher and higher. Meanwhile, we see incomes for the lower levels of the society and also in the middle income stagnating somewhat. In Singapore's case, in fact, even the real income for the middle and lower levels has been rising, but perhaps not as fast as, say, for the top brackets. So this is a challenge, and by virtue of being a city, because cities tend to exacerbate those extremities more, I think especially at the top end, so we tend to see this more. So yes, some of it will be ameliorated by measures like this, tax policy and so on. But I think fundamentally our conviction is that it's really about empowering people by education and skills enhancement, because we are creating new and different jobs which are of higher value that can command better salaries. But it means our people need the skills to be able to take advantage of that. So that is why you see there's a lot of emphasis in this budget and indeed in many previous budgets on skills enhancement. And now with the Skills Futures initiative, where we are allocating significant resources to enable individuals to take charge and drive their own upgrading, training, and work with their employers, so there's also funding for employers.
But despite saying that, there is growing discontent in the country. People just feel that cost is too high. That got translated at the last election where the ruling party won by the slimmest majority, slimmest margin. Is this part of an effort to win back the hearts and minds of the people, given expectations of an upcoming election?
I think you can't attribute an election result to one factor. There's always a variety of considerations and so on. And what you consider a slim margin at 60% is still a pretty decent margin by most records, I think. So I think what I would say is that, yes, there's one group that might be concerned about cost of living. And that is where some of the initiatives and transfers help. And this is particularly targeted at the lower income group, because even if their incomes are rising, as an individual, as households, they do need help. And this is where we're targeting it. So whether it's education, whether it's healthcare, and some of the other accommodation, housing, and so on, these are areas where significant effort has been allocated. But at the same time, I think we need to look at other elements, because I think when Singaporeans, when you talk to an average Singaporean, it's not just about getting transfers, it's about having the wherewithal to go out there, take advantage of new opportunities and enhance their lifestyle and their quality of life with better jobs and better income. So that's why the point I made about investing in people and allowing them to continually upgrade their skills, this is a key part of our strategy. And that's why our emphasis on quality growth, on high value-added sectors, on the use of technology and enhancing the skills base of our people, this is continuing to be the key platform for our economic strategy.
Foreign talent, that's an important factor in Singapore's economy. It's helped Singapore grow to where it is today. The Finance Minister, Tharman Shanmugaratnam, said during his delivery of the budget speech that there'll be no change. Limit will stay as far as foreign talent is concerned. What message is Singapore sending to foreign investors?
It's a very simple one. We are always open for business, and we continue to be open for business. We have put some curbs on foreign manpower coming into Singapore because there is a natural limit to how much we can absorb, and that is not a sustainable basis. Certainly low-cost foreign manpower is not the basis on which we can sustain our competitiveness. So what we are focusing on is, I have to point out that even after all these curbs, our foreign manpower has grown in the last few years, and the most recent year has grown by another 25,000-30,000 foreign workers. So the key thing is bringing in the right type of foreign workers, meaning in areas where the productivity is higher, competitiveness is enhanced, And that's the focus of our economic development strategy as well. Meanwhile, bringing in more in terms of local participation rates. So our women's workforce participation rates have risen, older workers' participation rates have risen. So that's a quantity side. And on the quality side, it's about emphasizing the enhancement of productivity and skills.
Is it enough, though? I mean, there is a labor crunch in the country. Some companies have moved out. How do you attract foreign investment when you don't have the labor to support it?
Well, I would say individual businesses have to make their own calculation, obviously. Our effort has always been to explain clearly what our policy is, how we can work with businesses to invest in Singapore and run an effective operation in Singapore and through Singapore into the larger Asia-Pacific region. So the key example I would give is Economic Development Board continues to go out there and we continue to attract investments. Last year we attracted about $12 billion of investment, fixed asset investment last year. And there was also good total business spending commitments as well. So companies continue to see clear value in coming to Singapore. But it has to be aligned with our own strategy because it cannot be businesses that rely on low-cost foreign manpower. It has to be high value added. It has to be focused on the larger Asia-Pacific market. And Singapore becomes a node in that larger network. That's the strategy.